Hello, everyone. Welcome back to How to Trade. This is part of our Switch Markets Live series. Today, we're going to do a live workshop with key levels. Now, key levels have a close place to my heart. They're one of the ways that I trade each and every day, whether it's a trend line, whether it's a previous day's high, low, overnight highs, lows, all sorts of big round numbers. If you've watched any of my streams, then you know exactly what I mean with big round numbers. This is one of my favorite ways to trade. I'm going to show you how to identify key numbers, the types of key numbers, and also what we can really do to build different types of trades. Whether it's a support or resistance play, a reversal play, a breakout play. About the only thing we don't do with key numbers or key levels, as we call them here in this workshop, is we don't necessarily play trends. And I know that's going to discourage a lot of you because a lot of you are trend traders. For me personally, I'm not real big on trends. Markets don't trend, but about 30% of the time. So I like markets that don't trend. However, we had some decent action today. WTI crude oil looks like we've sort of picked the bottom here in the U.S. session, right around 66.70-ish. I believe we had a Bollinger midpoint, daily Bollinger at about 66.56. So we pretty much got the daily low. We're trading down to that low right now. We're going to take a good look at exactly what's happening there in U.S. oil towards the end of the stream. We've also got to lead off with a trade idea that we had out yesterday. I put it out on X, and we're going to go ahead and go over that as well. So good to see everybody back in the room. A lot of folks here. Smokey, good to see you. Smokey, welcome. A new name. Don't recognize the name, but you're active in the live chat. We love active. So if you guys have any questions at all, be sure to ask as we're going through these concepts. We're going to go ahead and unpack as many key level concepts as we can. We're going to spot some live trades in the live market, and we're also going to take any and all questions and really direct you exactly where to find our strategy suite on the How to Trade YouTube channel. Now, we're live on a bunch of different YouTube channels. Forex Signals is where most of you join us from. How to Trade Com is another one where we get a lot of views, and also Switch Markets. Check out that Switch Markets channel. We're going to be posting a lot of new content in Switch Markets. A lot of it's going to have to do with the actual brokerage service itself and what we can do to get you up and running relatively quickly. So good to see you. X-Light, hey, Coach, how's it going? Looking good. Thank you. Trying. A little bit tired today. A bit of a rough morning. Took a loss in WTI. I'm not very happy with, but still a great week. And having a very, very good time trading in the last 5 weeks for me have been a lot of fun. So a lot of times this thing can turn into a grind. I mean, trading can turn into a grind. And it's been fun, and rarely is it this fun, but I'm having a lot of fun. So doing well, X-Light. Thanks for asking. Smokey, who else is learning how to trade? A lot of people are, Smokey. A lot of people are, and that's what we're going to try to do. We're going to try to cover any and all markets you want to cover. We're going to do that at the end of the stream. More than happy to give you my opinion on it, but what we want to do here is show you how to identify key levels and trade them. Let's see, Sasetti, good to see you. Welcome. Hello. A lot of nice folks in the room today. Bobby Bob, always a pleasure, Bobby. Tuku, good to see you, Bobby. Bitcoin, is it time to break all-time highs? Yeah, I think Bitcoin's going to 125. I've been saying that for a while. 125, I believe 125 probably by September, maybe sooner. But if you're holding longs Bitcoin, you're right. It's not. I don't think we fall back beneath 100,000. Steve Francis, hi Shane. Was there anything we need to know regarding the FOMC meeting? No. The FOMC minutes. It wasn't a meeting. It was the FOMC minutes, which was just your release, your basic statement of the dialogue between the FOMC members. We covered that yesterday. A lot of you guys watched it. Thanks for showing up. But essentially, no. There was no big surprise in there. There was some folks that thought we should stay higher for longer. Other folks thought there was rate cuts. There is a divide in that boardroom, that FOMC boardroom, but it's not as severe as I thought. However, today I did see some rumors flying around on X that Jerome Powell may be thinking of resigning before the end of his term. If that does happen, you heard it here first. I said that back in April. So I think Jay Powell's gone. I think he's going to announce that he's hanging him up, and I think it's going to happen not at this next meeting that we're going to have live for you later this month, but probably maybe in September, maybe in November. I think he's gone. Matter of fact, I know he's gone. He's not doing another term, but I think he could definitely exit stage left, especially if the private sector calls. Let's see, trading must NVIDIA. Yeah, I'll look at NVIDIA. Any other markets, AMD. I'll look at AMD and NVIDIA at the end of the stream. All right, guys. Let's go ahead and get rolling here with our workshop. But I do want to start off. Let's get right out to price action here. Enough babbling. This was a trade that I put out. I put it out on X. I mean, if you guys follow me on X, that's great. Shane V_trader. I don't really care if you follow me or not. I'm not in that to build a huge following and be an influencer. I'm not. I just like X because I can throw things out there as I see them. We post a lot of our trade ideas, our daily analytics here in the How to Trade trading room. I also post those on X. They also go on LinkedIn and they go on our How to Trade X account. But some of these that I see, I posted this one late last night and I said, hey, Shiba Inu daily chart. I have a long history with Shiba. I've been in and out of Shiba. I remember a couple years back, I bought a lot of it, and I won't get into numbers, but I bought a lot of Shibas, and I got a great rally on it, and it was really a fantastic trade. However, I didn't get most of the profits. I ended up taking some. It wasn't that great. I dumped my Shiba when we saw the crypto banking scare. Geez, it was either last year or the year before, but it was in the spring. I remember I held for about 9 months. This is pretty good stuff. We outlined this a long time ago. I said, listen, if we get a shot at Shiba at 10, you almost have to step up and buy it. That was fantastic. You're already up about 25%, but there's our 920. This is one of the strategies that we feature on our YouTube channel, a 920 crossover. Right there is your big bid, and we're already trending higher. I really like this. I think you've got a chance here to make a little bit of hay. The big, beautiful bill is passed. What nobody's talking about out of that big, beautiful bill is what it's going to do for crypto. I haven't heard anybody say, are there any allowances for crypto? There's got to be. There's got to be something in there. I've yet to see a financial media source cover it. But your topside target could be $12.95. That would be 38%. Boy, I would just be waiting. I'd be waiting for something up in the 13s or 14s. That's a pretty good trade. That's a 20%er. That's not bad, and especially if you're dealing in cash. Shiba is just fractions of a penny, so if you showed up with a few $100s, you could actually make a little bit of a return there. So that's essentially what we're doing there. Dave, F19, good to see you, Dave. So that was a good one that I wanted to start with here. Remember, if you want to trade any of these ideas that we talk about today or the strategy we talk about today, switchmarkets.com's got you covered. Bring your ambition into focus with thousands of global markets, fast and easy deposits, and zero commission accounts. Switch, it's got you covered. All right. Our How to Trade YouTube channel is where this strategy comes from. This is a key level strategy. This is one of my personal things that I use religiously, day in and day out. I'm always looking for key levels. That's old hat. I've been doing this for 15 years. I'm always looking for key levels. For me, a key level is a quarter handle. I'm going to show you that in a second, and then also previous days, numbers, and trend lines. But we got a lot of strategies here. Not many people have been watching the videos lately, and that's cool. I really don't care about the views. What we do care about is trying to get people up and running with the strategy. We talk about how to choose a trading strategy, intraday trend lines, trade the break as price action. A lot of people really love these orbs, EMA crossovers. They really love 5813 has been a popular one. This one right here is going to be one that really, it came out about 9 months ago. So I was, I guess a younger person, a much younger man, but it was very at the beginning of this channel. And right here is going to be the video. So if you want to watch this video in its entirety, and I do recommend it, it's a pretty good little video. I mean, it's not very long, but you'll get a chance to really check out exactly what I'm saying in depth and at your own time. You can pause it, you can rewind it, go through exactly what I'm saying. But this is key levels in trading, How to Trade Calm YouTube channel. Check it out. Lot 2 key levels. This is an old style of trading. There's nothing new about key levels. Key levels have been around as long as there's been a market. As long as people thought that something's worth something, there's been a key level involved. This goes back to the Dojima Rice Exchange back in the, 1700s, 1600s. Munishihama, when he was building the candlesticks, the initial candlestick, Japanese candlestick charts were used to price rice. Well, I'm telling you from experience that I don't care if you use candlesticks, moving averages, whatever, you will see clusters of price action around key levels. It's undeniable. If you can identify key levels, you can trade anything. You can trade anything. Coffee futures. You can say, we're going to do a piece on uranium, how to trade uranium. We're going to talk uranium futures. We're going to talk platinum futures. It could be anything in the world. It could be the Euro USD, the biggest markets, the smallest markets. If you understand key levels and how to identify them, you can trade anything. And that's why I love them. I've been looking at key levels and commodities for seemingly half of my adult life now. And now they're second nature. And when they come into play, they can really give you an opportunity to score, is what I call it, make money and score. And that's what you want to do. Bitcoin 113,000. We're going to look at, that's a great place to start. We'll start with Bitcoin key levels, and I will show you exactly what the key levels are for Bitcoin right now. Okay, so we got key levels right there. What do we need to do? We need to understand how to identify them. So what are the different types of key levels? Key levels are key numbers. It's the same thing. Don't get confused by, is a key level different than a key number? No. A key number is a price point on your chart. A key level is a price point on your chart. It's the same thing. They're synonyms. Use them the same. All right, the types of key numbers. Big round numbers, number one. We're going to cover that in Bitcoin. Very, very important that you understand the value and the importance of big round numbers, especially in trending markets. Number two, trend lines. Trend lines are a little bit trickier. I'm going to show you exactly how to draw a trend line and where you can identify those big either continuation or reversal strategies. I think it's going to be trend lines are really a powerful tool. I'm coming around to their usefulness. I'm not a big fan, but still, trend lines are big time. You need to understand them, at least know how to draw them and understand and interpret them. And number 3, previous highs and lows. That is huge, especially in the futures market. If you're going to trade futures, you need to know where the previous highs and lows are. And I'm going to show them to you. Some of them are more important than others. And when you get maybe a previous high and a low that corresponds with a trend line or a big round number, then you've really got a huge key level that you need to be aware of. Okay, so the types of strategies really that you can use key levels for, I mean, they're so versatile and give you a tremendous amount of strategic flexibility. Number 1 would be support and resistance levels. I love that. I love it when the market just bounces between 2 key levels. I mean, everybody looks at that and goes, okay, well, I'm waiting for the move, and I'm in and I'm out, and I'm saying, well, we got the move. For me, I love rotational markets. It's a lot of fun. Maybe that's why I used to hate trading in the summertime. Now I like trading in the summertime. It's pretty easy, really. Breakouts. The other thing is your key levels can lead to breakouts, especially in the case of a trend line. I'm going to show you a trend line breakout here using our MT5 platform. That's a pretty good illustration of that concept, and a reversal. Now, a reversal is absolutely huge because a reversal can occur with maybe a trend line, or it can occur off of a key level. Anybody remember 3,500 in gold? Huge reversal zone. Huge reversal zone. People made a lot of money on that. All right, so I'm going to go ahead and get out to the charts, and we're going to start breaking down how to find these things. The first one that we're going to go through is big round numbers, and I can't think of a better market than Bitcoin to start with. Okay, let's see. Ahmed Reda, for a swing trader, how to catch a good entry. Well, you need some type. If you're a swing trader, you have to understand fundamentals, understand key numbers. That's it. If you're going to swing trade, you need to know key levels. A lot of people don't believe that. Believe me. They can really help you get into the market and just help you get out of the market when you need to be out. So, I mean, all of these things apply. If you were a swing trader and we were looking at like the 5-8-13, I probably would be like, you probably don't need to know EMA crossovers as much. Key levels are more important in my view. Okay, here it is. Here's the Bitcoin USD. Now, let's step back to the monthly chart right here and see exactly what Bitcoin's doing. So, the first type of key number that we're going to do is big round numbers. And if you've followed any of my streams over the past, I don't know, year or so, 2 years, 3 years, how long I've been doing this, you understand right away what big round numbers are. These are also known as natural areas of support and resistance. They're also known as 100,000, that's 10,000, 100,000. They're also known as psychological levels, okay? So a psychological level or an area of natural support and resistance typically occurs at a big round number. What's a big round number? Big even numbers. What is that, Shane? It's very simple. Bitcoin, 100,000. It doesn't get any bigger than that. That was a huge level. We really needed to understand what 100,000 meant. Now, why would a key level be that important? Why would 100,000 be important? It's just another price point, right? It's not just another price point. It brings participation to the market. Now, why? Because everybody has an opinion. Everybody has an opinion on what Bitcoin's worth from 100,000. They do. They'd say a lot of the bears out there are saying, well, I believe Bitcoin's going to be zero, so this is a great top for this market. Eventually, it's a big con and it'll be zero. Okay, that's one way to look at it. The other way is that Bitcoin's going to be worth $1 million. As soon as we break above 100,000, buy it, bet the ranch, and we're going to let it go up. My point is this. If you're a bull or a bear, at 100,000, you have an opinion. I don't know of anybody that sits there and looks at a Bitcoin chart at 100,000 and says, I don't know. Everybody knows. You either believe it's support or resistance. Why? Because it's a big round number. It's easy for us human beings who aren't really that smart compared to the AI and the computers. We struggle, but we understand 100,000. We understand big round numbers. We understand $1, $2, $3, $4. We get that. What we don't really get sometimes is what an RSI is or some of these more complex indicators. So for Bitcoin, big round number, 100,000 is a great example. We talked about buying 100,000 last month. We said, listen, if it pulls back to 100,000, you got to buy it. That was a great play. That was a great trade. And listen, this isn't the I told you so stream. Believe me, we lose. And when we lose, we lean into our losses because we have to learn. I stared at my loss I took this morning. I stared at it for about an hour trying to figure out what happened. What happened? I got in at a saturated level when I shouldn't have done it. I didn't really have a key level to work with. My entry point wasn't that good. Because it wasn't that good, I didn't have confidence. I ended up taking a small loss. Had I stuck in there, I probably would have made some money. Point is this, key levels can help you not only identify support and resistance zones, but they can also give you an idea what the market's doing. So if I'm looking at 100,000 for Bitcoin, clearly that's robust resistance. right there, bang. We came off, we rotated down, and then we came back up. But once we broke 100,000 on that clean pullback of last month, that's a fantastic signal that it's now support. So a key level can be either resistance or support. You could buy it or sell it. You just have to know where it's at. So that's the first kind of key level, big round number. Now there's another kind, and it's trend lines. Okay, trend lines a little bit more tricky. They're a little bit more difficult. I'm going to show you my basic rules for drawing trend lines, and according to Hoyle trend line right here, this is your MT5 platform on Switch Markets. For me, it's all about the third touch on a trend line. A trend line is connecting two price points, either a series of higher lows for an uptrend or a series of lower highs for a downtrend. Now, what we're trying to do is we're trying to A, identify the trend. Very simple to do. I'm going to show you how to do it. B, that trend line can be either support or it could be it could be support or resistance or a breakout area. This is a great example of what a trend line is. And I'm drawing this in retrospect, but it's a good illustration. This spike low right here on this Kiwi, this NZD USD, give us a great reference to begin our trend line. So what do you got right there? Boom. There's your pullback here. There's your compression, your third touch, and then there's your break. So my point is this: the key level in this instance really wouldn't be a big round number of, say, 100,000 or 6,000. This type of key level would be based on a trend, be a trend line. Now, a lot of folks would say, Shane, your trend line's messed up. It should go right up in here somewhere. And I don't agree with that. I don't agree with that at all. I think that you could definitely connect this one to this point here, this second touch here, and then be looking to go short underneath that. Or you could wait for a more definitive pullback. That's typically what I do. I like something real obvious. But honestly, if you wanted to draw this trend line like this from here, let me see if I can actually draw the thing. If you're going to do something like this from here, I'm cool with that. I have no problem with that. I have no problem with that at all. Right there, bang, bang, you're still short. So the idea here is very basic with a trend line being your key number. What you want to do is you want to be able to do what? You want to identify where the market may in fact change direction or where it may actually may support the prevailing trend. So something like this. Let's draw the trend line again. My original trend line right here is going to go right through there. Okay, that's great. Higher lows, that's going to be an uptrend. So we want to do two things. We're either looking to buy off of that key level, which is the trend line. Okay, we're going to either look to buy and a continuation, or we're going to look to sell on the reversal. The sell looks pretty good. Looks like the sell was the right way to do it. That would definitely be what I would be looking at. But remember, if you're going to draw trend lines, you do not have to be absolutely perfect. I get so tired of watching YouTube videos where these folks are just sitting there. They're saying, listen, there's one way to draw trend lines. No, there isn't. There's a million ways to draw trend lines. A lot of folks draw trend lines right through the center of the price bars. You can do that. There's nothing wrong with that. My point is this: be consistent with what you do. I believe the two-touch method for drawing trend lines gives you the best opportunity to succeed, because then that third touch, that trend line's either going to react to support or resistance, or it's going to be a break point. And if it's a break point, right there, you got the bar closed beneath the trend line, then you're short. You made a lot of money. If you connected here, you still made some pretty good money, and you're probably right around scratch. You made a little bit on the downside. So a lot going there on the trend line. All right, we're going to get back to how to trade in a couple of these examples here in a minute. Now, previous highs and lows. I love previous highs and lows. Absolutely love it. Because the previous highs and lows, whether it's a day, a week, a month, or even a year, they draw participation to the market. They draw participation to the market. And what that means is when somebody sees the market approaching a previous high, there's a debate. Okay, buyers are going to say, okay, we're going to take that high out and we're going to break higher. That's exactly what AW just said. Bitcoin at 113. Essentially, you're trading up above. Let's see, the yearly high. Are we going to go higher from there? Or are we going to come back down? Sellers, retail sellers, are going to step in right in front of that high. Buyers, bulls, are going to bid right above that high, playing the breakout. So right here, this is a good example of something that we definitely can look at. So we've already established our key level there in Bitcoin, it being 100,000. There's no question about it. Big round number. But what do we have right here? Well, there was your yearly high was at 112. So let's go ahead and dial it in exactly 112. And this is the TradingView platform. I go back and forth. So something like that. Okay, we broke above that on our right now today. So right there, this month, July, we're pushing higher. We're up about 5.75%. That high essentially was going to be our big round number. 112, definitely it's a big round number. Not as important as 100,000, but still a big round number. We have to understand that, hey, that draws action. So what happened in front of there? We had a lot of retail sellers, okay, that were digging in, playing rotation off of that 112 level, and now we've broken the level. We've broken 112. So we've got a big washout going above that key level. Why is that 112 a key level? Yearly high, all-time high. Absolutely important. Absolutely important that we understand exactly what these things are and what they mean. Let's try a couple other examples of previous highs and lows. This is an interesting one for us. Japanese yen. Japanese yen monthly. So if I was looking at establishing key highs and key lows, what would I be looking at? You got it. Previous month's high, previous month's low. I'm not going to dial these in exactly. We're going to move quick. Those areas are going to bring two types of traders to the market. They're going to bring buyers and sellers. Now, I don't know who's going to win. I don't know if the buyers are going to win the day. I don't know if the sellers are going to win the day. I don't know, and we really won't know. That's going to all be dictated by order flow in the moment. But we know what? There's going to be action there. There's going to be action there. You're either going to see a breakout above last month's high, or you're going to see price fail and retrace back down into this range. We call that a failed auction. All right, we'll talk about that some other time. That's sort of a liquidity sweep idea, but it is something you got to be looking for if you're going to be a short-term trader. So I'm using monthlies right here. Let's take it. Let's take this right down. Weekly. Okay, there was your weekly high, weekly low. There was your weekly high, weekly low. Broke out hard, didn't we? Let's go to our dailies. Daily high, daily low. Previous day's high, previous day's low. So if we were going to look at this line right here, let's take a look at the action, and then we'll move on exactly how to trade some of these ideas. Let's take a look at the action right there, right around that level. Let's go down to, say, a 30-minute chart. Okay, right there. This is a great example of why it's important. I guess this big circle doesn't really matter. We can get that out of there. But take a good look at what happens right around this line. Yesterday's low. Okay, we test it, test it, test it, test it, test it, test it, test it. Now that's yesterday, right here. Right here. Going into that overnight, that afternoon, going into that Japanese session, into the Tokyo session, we're testing that zone, we're testing that low, we're testing that low. What happens? We break. We break right there pretty much on the Tokyo Open. Why? Because we broke beneath the previous day's low. That's huge. It's a bigger deal in futures than it is in Forex, but you still have to understand that. Look at this price point. We had a heck of a debate there. We're coming back down there again. Is it a buy or a sell? It's probably a buy. Why? Take a look at the order blocks. So those are three examples of the key levels. Remember, big round numbers, trend lines, previous highs and lows. Let me see if we have any questions before we get on to some actual trade ideas on some intraday price action here. Let me see. Hey, Shane, good to see you, brother. Good to see you. Funny math. Always a pleasure, funny. Let me see. Ayaz, Ethereum. I'm sorry. I have no idea what language that is. Ethereum, though. I'll cover Ethereum at the end of the stream. Let me see. Logic saying, that old man that was teaching was your dad? No, the old man that was teaching this was Logic saying. This was my uncle, actually. He was a honcho for Shell Oil. Made millions. So if you're sort of being facetious, Logic, don't believe in key levels, that's cool. That's who taught me, was pit traders, guys that made a lot of money. And I will tell you that daily I see key levels come into play. Absolutely huge. All right, let's do some trading here now. I've rambled on long enough. Let's go let's do something fun. Let's go to the US 500. Let's see exactly what we've got. Okay, we've got a trend line here. 30-minute chart. I love the 30-minute chart, especially during the US session right there. You've got opening bell, ding, ding, and then you've sort of got that New York low. And right here, you've got the third touch. You can already see we've established the third touch. After a while of drawing these trend lines, you'll be able to see them pretty much automatically. So right there, that would be, and of course, this thing's clicking. Remember, they're not going to be exact. Your charting software only has X amount of granularity, but right there would be your pullback, and that's just the way it's going to be. So something like this, then you get a doji. Would you be selling on a positive doji right on your trend line? I can't imagine, especially if it's that close. I mean, we can manipulate the trend line like that if you want, but it sort of clicks. Price is going up. Are there any key levels in play for this US 500? Your trend line, you could still really say it's up. If you wanted to bring it down right there, you could do that. But that realistically, that would have been your retracement touch right there. There's no way you can sell that positive doji right on the trend line. Not a chance. So what would we be looking at now for a key level? Anything we can hang our hat on. So if I'm in the US 500, let's back this thing off and have a look. Okay, monthly chart does us no good. Take a look at our previous key level. Would have been our all-time highs, our yearly highs right there. And that would have been where? Right around 6,146. What was the price action around 6,000? I'd say 6,000 was a big deal. It's a big round number. So if you're looking at something like this, right there, boom, we broke it. Now what? What's the next key level we can use? Monthlies don't matter. We're trading above last month's high. We're pushing higher and higher. We can go to a daily, maybe a daily. Maybe right there. High right there is 62.84. High right there is 62.83.4. You bet your tail there's a key level in play. What was it, last week's high? Something like that? Let's go to a weekly. There it is. Okay, so what's happening right now on the market? There's two things. Number one, we're rallying. US 500 is up about, 0.38%. But we've got a key level. Key level right there is 62.84.5. What happens? Right there, high, 62.84.5. Do we want to buy in above that zone? Yep. Why though? Think about it. You've got sellers that have stepped up right in front of here that are trying to play rotation back down. You know their stop losses are right up there above last week's high. Could you get a bump and a run here? Absolutely. Absolutely. So how could we do it? Well, we could put an order right here. You're going to want to buy the market. You're probably just going to have to use a stop. You'd love to use a stop limit. This doesn't have the functionality. The high right there is 62.84.5. Let's go right there, 62.84. I don't know. We could go 84.6 or 7. Particularly, I don't know. US 500, you're working with a spread. Typically, I would use this on a futures contract, and I would be the next tick up. And we can go ahead and buy the market there with the stop and just put that in the queue. So realistically, that would be your entry, 62.84.6. That's not right. 62.84.6 is what we want to get in at. Yeah, okay. So our orders are down. So essentially what we're looking to do here is we're looking to play a breakout above last week's high. Now, if we can execute it properly, what time frame should I use to manage this? It really depends on my risk. I mean, it really depends on my risk, but realistically, some of the things that I do, I'm showing you what I do every day. I'd probably be looking at a 1-minute chart, maybe a 5-minute chart. Now, the US 500 is a little bit tricky. It's not like we're trading a gold or anything like that or a crude oil where I can actually use a 1-minute chart to manage it because there's enough volatility. There really isn't a tremendous amount of action. You could use a 5-minute chart maybe. The idea being that you need that clean break, and then maybe you can locate your stop loss somehow. You could also back it up and use maybe an orb strategy with the key level involved. I mean, the sky's the limit with this type of stuff, guys. Your orb would have been what, right here? Something like this. Boom, boom. And then you would have got a break above, and you'd have been long towards your key level. Textbook orb strategy, if you guys know what I'm talking about, the opening range breakout. But could you, in fact, buy the top of this thing? Yeah, I really don't have a problem with it. Maybe reverse out, and if that does happen, that's fine. But we don't have a huge range in already established today. It really isn't a trend day. I mean, we're looking pretty good during the U.S. session. But is this the trend of all trends? No. I mean, we could say we're moving higher, maybe. Is that a good entry? You're buying the top of the market. Would you rather sell or buy? I'd rather buy it. And the reason why is the trend is up on all the time frames. It just is. So I would follow the trend. If I was doing something like this, I'd be looking at my 30-minute chart very carefully. I would absolutely love this. If we, in fact, did break, how many points are you really looking for? You got to get paid a little bit for your trouble here. So if, in fact, you go up and break above last week's high, you need to see that wash out probably up to 86 or 88. maybe 4 points. If you wanted to, your stop loss, what should your stop loss look like? Well, I mean, you could do it a couple of ways. You could use your signal bar. You can use a signal bar's low, just trying to play the range of that next price bar. You could put it beneath that spike low right there. If you wanted to, you could put it beneath the U.S. session low. I don't believe even remotely that's a swing trade. I wouldn't be doing that. But I probably, realistically, your stop loss on a day trade or a late afternoon trade could be right there beneath that spike low, 10 a.m. low. You could do that. Or you could even put it up in here. Or you could just use your head. You could sit here and just eyeball it and say, okay, what do I need to see? We need to see, what I want to see is good positive price action, definitive price action right off the bat. With a weekly level like that in play, potentially you should be able to get a nice big move here. Now, sometimes you don't. Sometimes the sellers step in and they win the day and you have a failed auction. Price reverts against you. Still, it's a trade. So where would your profit target be? I don't recommend managing this, setting your profit targets based on a 1-minute chart. It really means nothing. If I was doing this, it would be a 30-minute chart, something like this. That's a big risk for me. You could put it right here if you wanted. You could definitely get eaten up right there, though. So you go 62.82 beneath sort of the low of this price bar and look to get that extension, that bullish uptrend. And we'd be looking at, what, 82 and 84.6. So what is that? Something like 222, 2.5. So you'd be looking at 8.1. Something like that, 87.1. That would be your profit target. Do you get that? Could be tough. A safer trade is to give it more room. That way you're at least in position for the rest of the day, but something like that means you're really going to have to get up. You're going to have to get up at 8, something like that, 92. That would have to be your trade. That's a pretty good example of a key level in action, though. Okay, here we go. Looks like we're going to get it. Okay, there we go. Bang. We get a nice, good break right here. What I'm looking for on my break of my key level is volume. Where's my volume at? Okay, pretty good action, pretty good bullish price action. Right here, our volume's kicking in. We got decent volume. It's not great, but it's not bad. Something like that. Actually, I got a tick counter on there. But this right here would be sort of an interesting trade. So we got filled way up here, which sucks because of the spread. And when you're trading CFDs, that's the way it is. So where could your stop loss be? If I was doing this for real right now, I'd be looking at my 30-minute chart saying, okay, what do I need? Do you want to put it down here? I'd probably put it right here. And I'll be looking to get rolling somewhere right up there to that 87.1 level, I think was it. Right up in there, 87.1. You're going to need good bullish price action, though. And you can see we got destroyed by the spread. And that, if you're going to trade CFDs, you're going to have to deal with spreads. That's just the way it is. So right now, in my mind, on this key level, the jury is still out. I see the upward pressure. We're rolling sort of with the trend. We're rolling with the New York session trend, but I'm not necessarily convinced that we're going to go a tremendous amount higher. But if we do get momentum, I like our out. I think we've got a decent out there. We just got to get up. The market the bidders have to win from this zone. Is it a great thing to do? You're buying the top. So if you're going to do it, really nothing's happened on this trade. We've come off a little bit. You're going to have to stop yourself out down in here somewhere. Let's go down to a 1-minute chart. What you don't want to do is get caught up in a complete reversal off a key level. And right now, this price action isn't exactly the best. You can see our weekly high, our key level right there. We're getting compression. Now, the question is do we come off from here or do we go up? Right there, I would just leave it. I would leave my stop loss right there. I would keep this tight. I don't want to lose the ranch on this. If this thing reverses off of that key zone, I don't want to lose my account. Remember, we always recommend 1% to 3%, up to 5%. I'll look the other way on a 5% risk of your account balance, but you want to make sure that you don't get overextended on one of these trades. Now, what we do know is this. Your volume definitely is spiked. Your volume's up. Why is your volume up in the last 2 minutes? Because that key level is drawn participation. That's all there is to it. Let's let this play out for a few more minutes. I got some stuff there. Ahmed, could you please talk more about those key levels and how I identify them easier? High gold. Okay, let's look at gold. Let's see. We had some other requests. Yeah, I already covered Bitcoin pretty much. We want NVIDIA. I'll tell you what. I'll look at NVIDIA and AMD, and then we'll go gold. NVIDIA, AMD, and gold, and we'll sort of monitor this US 500 break. Not really breaking the way that I would like to see it break, but we've got a chance here. Okay. And I'll go over how to identify them. Actually, I already went through it pretty well. Just go ahead and review the stream, Ahmed. Take your time and go through it and just watch it once it's cataloged. That's what we want. That's what we want to see right here. Now that's the break. That's the volume. That's the break. Now, it's very choppy up there. I don't love it. That break right there probably should have paid us off, and it didn't. We're just going to have to stick with it. This right here I don't particularly care for, though. A lot of sellers up in here. A lot of buyers, a lot of sellers. That fill was horrible. That fill was absolutely terrible. Not good at all. All right. Let's wait a minute and see what happens. Definitely getting hit now, though. No two ways about it. Boom. This is one of those that you're going to want to pull the Band-Aid off. We're not going to take a huge loss here. If it comes down and gets us, it gets us. You step out, you come back. That was a pretty good rush, though. That one right there, we probably should have got up. But if you're going to take these trades, you got to make sure you get at least a 1-to-1. I'm not a big fan of playing these for huge breakouts unless it's early in the U.S. session, and then you can do it. Maybe combine it with an orb. But right now, I'd be looking at a 1-to-1, and that would be about it. We'll see if it gets up or if it doesn't. I'm not necessarily sure. All right, let's see here. What question was I on? Ethereum? NVIDIA. Okay, let's go ahead and cover NVIDIA. We're going to lose that. That's unfortunate. All right, let's go right here. Let's take a look at NVIDIA, change the subject a little bit while our trade's underwater. Don't like that very much. Okay, NVIDIA, what can you really say? I mean, we're back above all-time highs. We talked a lot. I mean, if you look at our analytics here, we talked a lot about golden zone bargains way back when on the daily. You can see the analysis is ancient, but right there, daily golden zone buy, that was back in April. We loved NVIDIA to the top side, and that was a buy from about $99. So all-time high is 153. I thought that was an absolute great investment opportunity earlier. Now, what happens here? Well, I mean, there's a lot that can go into this trade. Make no mistake, there's a lot that can go into this. For me, what are you doing? You're making all-time highs. So if we're talking key levels, and we are today, then we've got an opportunity potentially to spot the next one. What do you think the next one's going to be for NVIDIA? If you're in a trending market that's making all-time highs repeatedly, big round numbers are everything. 170 is the next one up. You could make an argument that you might get a little bit of selling there at 165, potentially. I would be watching my daily chart right around those two key levels for signs of pricing exhaustion. But if, in fact, this price keeps getting up, maybe 170, maybe 175. I love quarter handles, guys. 25, 50, 75, they're hugely important. You're definitely going to want to get in there to that. So that's what I would be looking at there, probably 175 to the top side. You might get a few bumps in the road there, but I have to tell you, I mean, it really does look like it's all systems go for NVIDIA to the top side. I just wouldn't sell it until you get to 175. What's my next big round number after that going to be? 200. Keep it simple. Keep things really simple. It'll pay off dividends. Let's see. You wanted AMD as well. So long to tell you. AMD, interesting. See, now this is much different, but this is a great example of 150. What do you think 150 is? It's a monster level. Look what happened right here. You got a high right there of 147.75. That's not an accident. Seller stepped in, protected it. About a little 250 range there, protected that zone. 150 is the game. So what would you be doing right here if I was trading AMD? I'd be long. There's no reason to not be long unless you've got an earnings. Do we have an earnings report coming up today maybe? 3% HBC upgraded its demand with the top side target, a buy target of 200. See, that's good news. Something like that. You probably just want to hold. This spike high is definitely a huge level, 147.75. What is that, the monthly high, last month's high, or the last week's high, whatever? That's a huge key level. Be watching that. 150 is huge, though. I would be watching that relatively closely. Am I a seller from 150? No, you probably want to play a breakout above 150, but there's going to be a lot of sellers right in front of 150, I can tell you that. So that's how I would see AMD. Gold. We want to look at gold now. I don't want to look at gold CFD. Give me spot gold. Had a great trade in gold. I was scoping earlier today. We just didn't quite get it. Gold is a great example of the key number of all key numbers. This is the biggest one on the board, in my opinion, right there, 3,500 in gold. Know where that is at all times. If you're going to trade, know where that is at all times. That's absolutely huge. What do I think of gold? The gold market right now, it's horrible. It's in complete rotation. You can see right here, we're trading right off of my 13-period EMA and my Bollinger midpoint. That's a non-committal technical area. That's really difficult to sort of get a beat on this market. For me personally, I would be backing up to longer time frames to try to figure out what the heck's going on. We have a 13-month EMA down there at 32.71. I think that's a pretty good long. As far as what can happen right here, Spike high, spike low. Top side resistance at 33.75. I'd probably be taking that short right up in that zone. As far as whatever we have to the downside, I just don't think gold's going to move right now, and it's not. It's flat market. These flat markets are tough. I've had one gold trade all week, crushed it. It was a great trade, but it's been few and far between with my own range strategy. So for me, gold has slowed way down. I'm still running the numbers. I still want to trade it, but it's just nothing's happening. I think I have a sell up there at somewhere right around 33.40 something today. We're not going to get there. We're not going to move $14 and that's in the futures market, but we're not going to get there. So something to think about there, but I'll be looking at 33.75 to the top side, and down here was going to go ahead and be the bid, this EMA about 32.45, maybe 32.50. So the game really is being played between about 32.50 and 33.74. That's actually a relatively tight range of about $125. I would not, oh man, you're waiting for a big mover and a shaker there. I just don't know that we get it. Dre Day every day. Hi, Shane. How's it going? Please, what do you think about gold? All right, that's gold. I don't like gold very much, but top side resistance at about 33.75, 33.74, top end of that golden zone, and then downside support 13-week EMA right down there at 32.71-ish. It's not bad. Let me see. Great Britain Pound NZD. Yeah, we want to look at Ethereum as well. We had somebody wanted to look at Ethereum. The breakout's on clearly. This is absolute compression. So again, with our key levels, and I think that one of the logic saying was being facetious about, oh, Shane, you're an old man. Who taught you this? Millionaires taught me this stuff. So I listen to millionaires. I don't listen to YouTube videos. I can tell you that. Am I a millionaire? No, not yet. 2,500. You can't sit there and tell me that these big round numbers aren't important. 2,500 in Ethereum. That's a hell of a fight, guys. That's a hell of a fight for several months. Boom, doji. Basically, that's called an area of fair value. That zone right there around 25, everybody had an opinion on it. That's value. We broke down, market comes right back up. We're breaking up, market probably is going to come right back down. Am I a buyer and a seller right now from 2,500? I'm a buyer. I want to be a buyer from there. The only question is how can we do it? Your daily, you're going to need to get a swing high to develop something like this. Do I believe that the breakaway trend's going right now for Ethereum? It's definitely a breakout. Elvis has left the building. What's my next key level, though? It's going to be right here. It's going to be that spike high right there. I didn't draw it right. This spike high right there on June 11th. June 10th was my birthday. I was in a hotel June 11th. That was fun. But right there, 2880. That's huge. That's a huge key level. Be careful there. Could be sellers. Could be predicate for breakout, though. Weekly. There's your weekly chart. Okay, bang. That's going to be June's high as well. That's a big level right there. If we can take that out to the top side, then we'll start looking for 3,000. You don't think there's going to be a fight at 3,000? There will be. How about 3,500? How about 4,000? Sorry, guys, but key levels are how markets are made. A lot of folks like smart money people individually. I'm not picking on anybody. Whatever you're doing to make money, God bless you. But the smart money people are going to call these liquidity sweeps. They're going to say, oh, that's a stop run. That right there is a stop run and a liquidity sweep. But why is it a liquidity sweep? And why is it a stop run? Because of the key level. It's a chicken or the egg type of a thing. The level makes the price action. The price action doesn't necessarily make the level. At least that's the way I see it. Now, a lot of folks take the other side of that argument and say, hey, listen, price action defines which levels are important. No kidding. But I know going in 4,000 is going to be important. I'm 3 steps ahead of that. I'm 3 steps ahead of somebody waiting for that market structure to set up. I'm already waiting for that to set up. I'm saying, okay, I know that we have a chance of this setting up here, and as soon as this thing starts to fizzle just a little bit, bang. So what I'm saying is key levels can really help you understand market dynamics and give you an advantage over most other people out there that are just using moving averages and Bollinger Bands and things like that. Understand where your key levels are. Believe me. All right, last market, and then I'm going to go ahead and sign off. Great Britain Pound Kiwi, absolutely. I haven't looked at this one in a long time. I don't typically trade it. I love the Kiwi. We had a great Kiwi trade the other day, Kiwi US dollar on the RBNZ. It was a good trade. Really liked it. Okay. Compression, absolute compression. What do we do? You want to be long or short? Good Lord. I mean, the grind, this is a grinder. This is a really tough one. This market's dried up into nothing. So if we're going to use key levels, and we should. Here's what I'd be looking at. I'd be looking at that spike high up there as key, but more importantly, this right here. Last month's high, last month's low. Take a look at last month's high. What happened? High right there is 22741. Sellers dug in right in front of that zone and sent price down. Now you're rotating right back to the center of the range, which looks to be right around 2250, something like that. I wouldn't be long or short. Gun to my head, Shane, you got to make a decision. Go long, hold longs. But as far as taking a big short here, I don't know, guys. I would really I would steer clear of this one, Dre Day. I want to be long. Yeah, I mean, I want to be long too, but you know, where do you buy from? You could buy down here. You know, you might be able to buy down here. Let's dial this down to a weekly and see if I can do anything to help. I can't. Fibonacci's don't work here. If you wanted to be long, you could take that 13-week EMA right here and buy it. I wouldn't hate that trade. It's got an EMA. Typically, a weekly EMAs. I mean, those are tough to beat. Something like this on a daily. Okay, you got a nice little Fibonacci going, so we could do something like this: spike low, spike high. Pull back, 22507, maybe 224 down here. Let's try this out for a minute. I'm going to show you sort of a multi-time frame overlay. I know we're getting pretty advanced with some of these concepts. I get it. I know, but when you guys have done this for a while, you'll get advanced too. Okay. So that would be Dre Day. That would be your trade. That would be your entry. So if you want to be long, you would be waiting for 78.6, right down there, 22447, and that'll be sort of down towards the bottom of this range, which will give you an opportunity maybe to get long with a little bit of meaning towards the bottom of this value area. But I will say this, that's hard. That's really hard. That's hard to trade. All right, looks like this thing's reversing on us up here, US 500. Did we, in fact, get stopped out? We came up to break even a couple times. Didn't quite get the follow-through. This is a failed auction in my opinion right now. So it's a matter of time. You could leave your stop there, or you could just exit stage left and take a small loss, or you could just let it play out. I mean, there are bidders there. The only question is, how long are they going to be there for, and are we going to see a late-day sell-off? This 5-minute bar right here sort of hurt our feelings a little bit, but you could see if you were playing it tighter, you would be out of this trade. I don't necessarily know if you want to be out of this trade yet. I think that this where we had this price action wasn't the worst thing I've ever seen. Something like that. We may get stopped. We may not. Looks like we will be. But this this right here, 286, 62.86. We came up just short, about a point short. Happened to me earlier on WTI. I was in the money and then ended up taking a loss. Wasn't real happy about it. All right, everybody, that's going to be a wrap for me today. Went on long enough about a lot of things. Tomorrow, there has been a change to the trading schedule, the streaming schedule. I've got some other video work I have to take care of tomorrow, so I'm going to need most of the U.S. session to do that. We're going to go live early. We're going to go trade the U.S. Open live. We're probably going to be rocking that 9 EMA with confirmation strategy. We're going to do that. We're going to do some Fibonacci's. We may even, believe it or not, we haven't traded the Piranha for a while. We haven't traded the Piranha, so I think I'm going to put dust off. I'm going to blow the dust off the Piranha, maybe trade some Great Britain pounds on the 5-minute chart. This trade's not dead yet. This isn't dead yet. I do believe we're going to grind higher. I really do, but we could definitely get stopped out before it happens. And we've got, about T-2 hours, 15 minutes left in the trading session. It's high risk. There's no question about it. All right, everybody, I'm going to go ahead and sign off today. Thanks for joining me for the Key Levels Workshop. I know that some of these concepts may not agree with you. You may not be sort of on board or not understand the key levels. Key levels are one of those things I really believe in. And when my Fibonacci's line up with my key levels and maybe my 13-period EMAs in the mix, I have a high degree of confidence that things are going to go my way. And, like the gentleman said earlier, who taught you this? Your dad? No, my uncle did. And like I said, just because something's old doesn't mean it doesn't work. All of this stuff's old. Anybody that comes to you and says there's something new under the sun, essentially your ICT stuff and all that stuff that's in vogue right now that everybody loves, you could say it's based on OHLC patterns, open, high, low, close bar patterns, and they were using those in the pits back in the 70s to trade coffee. So believe me, nothing's new. There's just different ways of packaging things. As far as AI goes, yeah, plug in an AI bot and see how you do. Keep me posted. I think it's possible. Just good luck. All right, everybody, I'm out. That's plenty for today. You guys have a fantastic trading session. If you have any questions at all, swing by How to Trade. If you have any comments or questions, go ahead and leave them below this live stream as soon as it's cataloged on Forex Signals TV, Switch Markets, and also How to Trade.com on YouTube. Thanks for joining me. Have a great day. We'll see you back here tomorrow to trade the U.S. Open. Trade well, and we'll talk soon. See you.